Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. It has been an amazing year, 2009. Lots of things certainly to be thankful for, and lots of things to be glad we're just done with this year. Joining me, as always, the co-host, financial strategist, Russell Gray.
Hi, Robert.
You know, it has been an interesting year for real estate investors, don't you think?
Well, you know the old song, it's the happiest time of the year. There's another word that has that app in it that sometimes reminds me of the year. Yeah,
something that also happens. Well, you know, yes. for many of us, we're just happy that this year has been put to bed, right? That it's always great to end the year, the holiday seasons, and look forward. And one of our favorite times, both you and I, is the beginning of a new year when we have lots of opportunity. And kind of, as real estate investors, our mission is to figure out where the opportunity is. And so what we're going to do over the next few weeks is bring in some of the big brains, some of the top folks, some of the folks whose opinions we respect, and get their take on where the market's going. Now the tee up here is nobody has a crystal ball, right? Nobody knows for sure. But when you have people that have experience and have wisdom and have gone through both good times and bad times, they have perspective, and that's the perspective we're going to do our best to share with you, because we think that there's some amazing reasons to be excited about 2010, and there's certainly some great tools you're going to have this year that you haven't had before for lots of different reasons. And the stars have aligned for us today. We have two folks from the Rich Dad camp with us today. Both Ken McElroy and Kim Kiyosaki are going to be on the show today, and we're excited about that. First of all, let's not waste any time. Let's welcome back to the show honorary real estate guy, Mr. Ken McElroy. Hey, Ken, how are you?
Hey, guys. What's going on?
We are excited about the new year, and we're hoping you are as well.
Why wouldn't you be? It's the greatest time to buy ever.
Yeah, isn't it?
Yes, it really is.
Now, it's interesting, as we've gotten to talk over the last couple of months, you guys are always busy, but it seems that now you're really spending a lot of time on markets and acquisitions, and you're like a kid in a candy store.
Yeah, we are. We had our best year in 2009. We have really big plans for 2010 and 2011, acquisition plans, and you know, the challenge for us is as always, people. You know, finding the right people, staffing up, and getting ready for you know, all the business we're going to have.
Yeah, absolutely. Now, your background, of course, is varied in real estate. You've been involved in real estate development, in property management, but I certainly know that you've got a ton of experience in the apartment market, not exclusively apartments. You guys have done real estate, retail and commercial and so forth. But in the apartment business, it seems to me like in the future, we're going to have more and not less renters. Would you agree?
Yeah, there's no question. Yeah, I mean, it's unfortunately there's been unraveling going on, as you know, in the residential side, and still going on, and still going to continue to go on. You know, at least for next year. And as that unravels, there'll be people that will move back into rental housing, no question about it. And of course, it's harder to buy a home, so it's going to, I guess. The word would be restrict people from moving back in with zero down programs like they used to.
Yeah, it's definitely a restriction. And also, I think there's people that are just kind of reevaluating their lives and maybe taking a year or two to rent. It makes sense anyway.
Yeah, I think that's largely true. I think people are you know, emotionally beat up, and I think sometimes it's just good just to say, all right, I'm going to rent and figure my life out, figure things out, regroup, and yeah, so, you know, whether they rent in a single-family house or an apartment or a condo, I agree with you, and you know, we're excited because obviously all of those things, in addition to the population boom on the Echo Boomer side, and then, of course, the lack of financing for new apartments just mean huge demand in a couple of years. So that's why we're buying so much.
Now, as you get out your crystal ball and look forward at 2010, what are some of the big strokes? What are some of the things that, from your vantage point, you see this year shaken out as?
Well, I think the first thing is I think there's going to be a huge number of foreclosures again. I think that there's a bunch of pent-up demand on the residential side that hasn't yet been released. It's been slowly been released, or I guess the banks, you know, I mean, you hear all the calls where they call and can't get a hold of anybody, you know what I mean?
Yep.
Well, that's because of the workload of the asset manager. What that means is there's so many out there. It's going to be 2010 is going to be scary. In fact, I know there's 28 million. The Wall Street Journal said 2 weeks ago there's 28 million people that owe more on their mortgage than their house is worth. So, and I think close to 5 million of those are already 90 days delinquent, and those are not even in the numbers. So, the MLS numbers and the supply yet. So I think, and that's going to vary by market, but that's the residential piece. The commercial stuff is really the stuff that's it's going to be very interesting because let's just talk about office, for example. If you were a business and you got 10,000 feet 3 years ago or 2 years ago even, and you signed it at, I don't know, anywhere from $20 to $30 a foot, let's say.
Yep.
Those, and you're coming up on a 3-year renewal or a 4-year renewal or a 5-year renewal or whatever. You're renewing at 30-40% less today, right?
Yep.
So what's happening, or what's going to happen? That's if A, they probably downsized, or B, they went out of business, or C, if they didn't. If they didn't, they're going to the landlord and they're saying, okay, Mr. Landlord or Mrs. Landlord, the rents are now 15, 16. And, if you don't renew me at that rate, I'm going to go next door down the street, and that's what I'm going to get anyway. So,
right.
So all that stuff, all those leases that are going to renew in 2010 and 2011 are going to affect at some point the landlord's ability to pay that mortgage. You know what I mean?
You bet they are.
So that's what's coming next. That's if they already aren't in default. That's if that's if like a retail center that lost an anchor, like Circuit City or any of these big TJ Maxx or whatever it might be, Mervyn's, that kind of stuff. On the retail side, those are huge hits to somebody that owns that center, and their ability to carry it through these tough times when consumers are saving more, it's going to be very, very interesting. And, if they make it. And so I believe that there's going to be a lot of stuff that will, eventually, change hands. Now, I don't know in what capacity, but there's a lot of deals actually happening, Robert, as you know, that are not even making the street. They're getting done in the lawyers' offices. And so I don't know how much of that is actually going to hit the market, but a lot of it's going to change hands, and notes are going to be written off from higher to lower, and depending on who holds that note, traditionally it's some mutual fund somewhere, right?
Yep.
So, we're going to see some 2010 is going to be rough, I think. So a lot of people are saving money now just because they're unsure. He said when that money starts coming out and gets into circulation, in other words, when we add credit, that's when we're going to start seeing inflation.
Yep.
And so, which makes total sense to me. And so let's just say that happens in 2010 or 2011. We're going to see significant inflation. And we have to. You can't double the money supply and not see that.
Boy, it sure is. I can't wait for this cruise. We're going to have lots to talk about. It's going to be awesome.
Yeah, so that's what I see. It's not great news, but if you have a buyer, if you have a good team around you, what a phenomenal 2-year opportunity, because we are truly hitting down.
Yeah, isn't it true?
Yeah.
It's going to be a good opportunity, and it's going to be a fun ride as well. And they say, may you live in interesting times, and clearly next year will be that. Kenny, we certainly appreciate your time, as always, today, and we look forward to seeing you in April on the Investors Summit at Sea.
Yeah. Hey, thanks for having me on, guys.
All right, there you go. Rich Dad advisor Ken McElroy. He's a best-selling author and an amazing real estate practitioner. He and his partner manage over 10,000 tenants. So that just tells you that's someone who's got some perspective.
That's a lot.
That's a lot. 10,000 tenants who wake up every morning and live in one of their buildings or a building that they manage. That's pretty extraordinary.